Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's brutal, it's grueling, and it's downright vicious. This is Share Shootout, the most vicious stock-picking show on TV. I am Bruce Whitfield, and this is Share Shootout. Welcome to the show. Right here on CNBC Africa, first in business worldwide, I am the judge, jury, and adjudicator. Well, will South Africa have enough budget to meet the personal aspirations of the president? How did traditional African beer manage to dodge the sin tax hike? And are there enough jacaranda trees in Pretoria to shade the flock of journalists reporting on the Oscar trial? Now, we may not be able to answer all of these ungovernable questions, but what we do have is a man who was once a British office cop. Well, in another language, he was a security guard. Big, burly, and he shaved his head. Another who loves to beat around the bush. Will Andrew remain supreme, or will he flow out of here like a river? Introducing the champion with 4 appearances, 3 wins and 1 loss, Andrew Baby Daddy Dittberner from Cannon Asset Managers with bags under his eyes. But will he have what it takes on to take on the 8-appearance veteran with 5 wins and 3 losses? Viv, I scare people when I stand up, Govender from Vunanai Private Clients. Our guests have each picked 3 shares. It's kind of like poker. Neither knows what the other holds. We've just got 30 seconds to define their pick for us. We don't cheat, we take no prisoners, and we are the most vicious stock-picking show on TV. If they leave it too long, they may have to accept something they don't like. You understand the rules? You understand the rules. It's been a long time since you've been here, Viv.
Yes.
Should we make Andrew go first, or do you want to go first?
I think Andrew should, the champ should lead.
The champ should lead. The champ should lead from the front. So you've given us 3 shares, less obscure than last year, but from the smaller side of the JSE, all 3 of your picks this evening, some adventurous ones, some interesting ones, and your first one is not short of controversy. Here we go on 30 seconds for Adcorp Holdings, please, Mr. Dittberner.
Yeah, Adcorp's a workforce management company or recruitment business. There are 3 attributes that we like to this business. They cover the whole spectrum of employment, from your executives down to people working on the factory floors. They they don't focus on one industry, so they're not beholden to a single sector, like some recruitment companies are. And then they've got operations outside of South Africa, in Africa and Australia. They say this year 25% of their profits are going to come from outside our borders, which obviously mitigates the obvious risk in the South African labour market.
There we go. And that obvious risk, of course, is the whole labour broking issue, which if they were focused solely on South Africa and solely on blue-collar workers and solely on rock drill operators, would be a problem, would it not, Viv?
Oh yes, most certainly. The worst thing any company wants to do is have the government be out there trying to basically stifle your business and make you less profitable or less, successful. And that's obviously an issue here. Of course, it is diversified. We do have exposure to other markets, etc., but still, they are exposed to the South African market, and that's a risk to be considered.
But if you look at the rapid evolution of this company, 18 months ago, there was virtually no offshore earning, was there?
No, exactly. I think 2 years ago, 3% of their profits came from outside of our borders. So they're growing very rapidly, and that's part of their strategy. No, I don't think so. If you look back over the last 10 years, not focusing outside of our borders, but the company as a whole, they've grown their net asset value at about 20% per annum. So they've shown that they can sustain this.
But managements can often be distracted. If they take their eye off the local ball, and Richard Pike is travelling more than ever before, and he's going to visit operations, and he's looking at new opportunities all over the place too, does not take Richard Pike out of the daily boxing ring, the scrummage that is the South African labour market.
Yeah, I wouldn't be too concerned about that. I mean, management have to diversify, and they've got to be innovative, and that's what they're trying to do. They've got an Indian operation as well. So yes, whilst you might be travelling around a lot, there's not too many businesses out there at the moment that the CEO just sits in his office all day, and they're all trying to innovate.
Such a nice new office. Such a nice new office
exactly.
as well. Viv, do you like it?
Look, I do think that the regulatory issues don't just affect South Africa. If you look at around basically the world, labour issues are coming up to the fore. You're not just going to find, difficulties in the South African market. You'll find them in India. I mean, Indian difficulties in finding workers, difficulties in the labour market are probably even worse in South Africa. And you'll find that same thing occurring in much of Africa as well. So if you're trying to focus on multiple countries, you're trying to focus on an industry that's so highly regulated, I'd find it very difficult to understand how you'd be able to actually find success and focus yourself properly when you're dealing with so many regulatory issues.
You're shooting it down.
I'm shooting it down.
You're shooting it down, Andrew Dittberner. Okay, Adcorp. You know what? That's the best of a big lot. So, good luck to you in picking one of the next two, Viv. Let's go to the larger side of the market, Viv Govender, the taller side, the bigger side, from Vunanai Private Clients. You've got 3 picks for us this evening, 3 lovely companies, but are they good shares in which to invest? It's going to be your job to convince us of their investable merits. First up, in 30 seconds, Steinhoff International.
Look, Steinhoff just came out with results, very good. Look, they have a great management team. They have exposure, as you go to the vertically integrated furniture sector. They have holdings in JD and CAP as well. And we are looking at a company that has a history of being able to do these incredibly smart management decisions, in areas that, you'd be think they'd be quite difficult with. For instance, they've managed to actually increase market share, do rather well in France, of all places, in the furniture sector, which you'd think, in the current climate, you would think this would be the one sector and the one part of the world which you do very badly in, but just shows the quality of their management, their long-term focus in order to get this done.
Conformarama is the business which they control in Europe, which is a big focus on France. They also control another group called JD Group. Is that enough of a deterrent for you, Andrew, when you look at their control of JD Group and the recent JD Group results, and the fact that we've got David Sasfin, the chief executive, on the chairman, I think executive chairman, on compassionate leave at the results. Steinhoff guys running in there, big-eyed, running the business of JD Group. That's a little bit scary.
Yeah, I think the concern for Steinhoff would be the European business. Obviously, most of their earnings come from Conforama, which we've mentioned. And obviously, the European economy, yes, it's improving, but the consumer, as they are here, are continuing under pressure. Alongside that, I think if you look at the tangible NAV of this business, they've done a hell of a lot of acquisitions over time. So when you look at their book value, whilst it looks quite impressive relative to the market cap, when you remove the goodwill or look at their tangible NAV, suddenly there's a question mark. I think they've got negative tangible NAV on their balance sheet.
Why would that matter?
Well, if something goes wrong in one of those businesses and they've got to impair, they're going to wipe out the balance sheet. So that, for us, would be a big concern. There's a hell of a lot of going on in this business at the moment. Yes, I do smart deals, but it's quite a difficult business to understand.
It's easier to understand than it once was, though. I mean, they have refined the business considerably in the last 5 years.
Yeah. And also, speaking of the European business as well, one great thing about Europe, if you're an incumbent, is the fact that it's very difficult to actually break into that market. For instance, in France, a shop has a license to operate in a certain area. You're not going to get a competitor coming anywhere near you just because of the difficulty.
That's very nice. You've spoken about Conforama. Answer the questions that Mr. Dittberner raises. The balance sheet is vulnerable.
Yes, but the thing is, look, you talked about a company and you talked about the JD Group having troubles, but you have the Steinhoff management, which you admit to be good, coming in and taking over it.
You confess. You admit it.
Yes, you do have better management coming into place here. They have a great history of being able to handle these deals rather well, and this is what we're going to be trusting going forward. Yes, a little difficult to understand. There's no doubt about that. That's because management is quite smart and doesn't do these simple, straightforward deals, but does them very smartly, and it's been profitable historically.
It does. Does smart always equal good, though, Andrew? Because sometimes if managers are too smart for the market, doesn't that it makes my skin crawl a little bit?
Yeah, I suppose you could be too smart for your own good, I guess.
Are they?
But, geez, that's a difficult one to argue, and I'm not going to put a yes or no on that question. But, when you've got good management, smart management, you end up paying up for it, I suppose. So that would be a concern. Steinhoff's share price has done really well.
It's trading on a multiple of less than 13 times on historical earnings.
Yeah, it's, it's a difficult one. We don't like the business not because it's expensive. We don't like the business because it's difficult to understand. We want to invest in companies that we understand what's going on, and we battle to do that with Steinhoff.
You're shooting it down.
Having said that, because it's not that expensive, I'm nervous of shooting it down because I don't know what the next 2 shares are. If they're in the top 40, I'm guessing they're expensive. So
one's quite expensive, one's not so expensive.
In that case, I'll shoot it down.
There we go, you see. It's called guiding the witness. But luckily I'm not a lawyer, so I'm okay on that one. He's shooting it down. So we got Steinhoff shot down. And then, Viv, let's look at Andrew Dittberner's next pick. He's from Cannon Asset Managers. This is an interesting one because it's one of these companies that does not do all that many interesting things. It should be more interesting. It should be more exciting. It is a bank that lends to entrepreneurs. Maybe their clients are exciting and interesting. I can't get excited about Sasfin, although it has a decent share price performance in recent months. Tell me why you like it in 30 seconds.
Yeah, I think the share price has done well over the last 2 decades. This is a fantastic little bank, Sasfin, mid-tier bank. The larger banks have done really well. They're at near-time highs. This is where we see growth in this part of the market. The quality of the book's very good by our estimates. And when you look at the earnings over the past 17 years, they've been positive year on year. They've never missed a dividend. It's a family-run business, so management's interests are aligned with shareholders' interests. They've got a long-term focus. So it's everything that we look for.
What are the origins of Sasfin?
What are the oranges?
Yeah, origins. What are the oranges? No, what are the origins of Sasfin?
What are the
There we go. Let's test your history knowledge.
I think they listed back in 1987.
Before that.
They were founded, I think, in 1960.
Before that. They go back to there's something to do with just an old-fashioned trading business. And that's how they got into the entrepreneurial space. And they were basically traders of commodities and all of that sort of stuff, but rural trading, all of that.
I know they listed in 1987. There were, I think, 100 companies. There was a big listing boom that year. They are one of 4 companies that listed then and are still listed today. Okay. I think Adcorp's the other one. So they're a good quality business, and I think that shows the quality of it.
Do you like Sasfin, Viv?
Yes, I mean, you have to put some kind of caveats there. We just had an interest rate hike. Historically, we don't have one hike and just let the market rest. You usually have a couple following them. And any book, no matter how good it is going to be under pressure as interest rates start to rise. That being said, I do like the company. I do like, the business that they're involved in, the management and the history of them has been very good. And I like management.
You know what I like about this business right now as well, as in the budget speech last week, the finance minister made a couple of quite important announcements, 5.6 billion rand, not to support the kind of entrepreneurs that a bank with Sasfin, but to support entrepreneurial startups, to support small business. Also, crucially, allowing companies to go and list offshore, sort of technologically advanced companies, the companies that you see growing up in places like Stellenbosch, to go and raise capital elsewhere. Sasfin's got to see a business opportunity in that, perhaps.
Oh yes, but I mean, obviously when you're going to list offshore, if look at the Israeli experience, I mean, they've had a huge jump up in their technological startup, Connect, etc. All came from Israel, and they've had a huge business there. But generally, you tend to find it's not the local, financial horses that are helping those businesses. When you list for $1 billion, you find the Goldman Sachs of the world coming and look at your operations.
So Sasfin may lose out on that.
Lose out there.
Do you like it enough, though, to pick it?
I will pick this as my.
You will take it. Sasfin is accepted. Sasfin is taken. Andrew Dittberner. So you've managed to convince Viv Govender of the merits of Sasfin. 1.5 billion rand banking business, multiple of under 11 times historical earnings, cheap relative to the sector other than Barclays Africa, which trades at sort of a similar multiple. Right, Viv Govender, your second pick for this evening here on Share Shootout, a 124 billion rand company, trades on a multiple of 33 times. You don't know if I'm lying about the last one now, do you? Aspen Pharma here in 30 seconds.
Look, Aspen is not the leader in any particular area, but what it does, again, is good management. And I like good management because one of the best indicators or one of the best predictors of how good a business is going to be in the future is its management, as opposed to some of the things you see like the PE ratios, etc., etc. Aspen's history of actually getting a great pipeline coming through from GlaxoSmithKline and also from Merck, the acquisitions they've done in Australia, the moves they made into the fast-moving consumer goods market in Asia as well. All these factors put together make me believe that this company has a great deal of growth in the future. Makes me believe that they've had smart acquisitions in the past and they're going to have smart acquisitions going forward as well.
Do we like Aspen? I mean, you technically you can't like it because it trades on an historical multiple of 33 times earnings, but you cannot dispute the enormous growth trajectory of this business and the possibility of it continuing into the future.
No, you can't. I can't disagree with anything that Viv said. I think Mr. Saad and his team have done a superb job, and I think this highlights what good management can do for a business.
But with your deep value bias, can you possibly accept this share?
This share would never, at current multiples, would never find its way into our portfolios. So unfortunately, no.
Nor would Naspers at $160.
Nor would Naspers, no.
But even Naspers at 100, I'm talking about Naspers, 6 or 7 years ago, 2008, 6 years ago, Naspers would never have found its way into your portfolios either, even at 160.
If we're standing here with hindsight, yeah, we probably would have.
but we don't.
At the time, no, yeah.
But isn't that the risk,
science.
though, of deep value investing, in that there's some companies that simply do not obey the laws of nature or markets?
Yeah, of course. They're always going to be your outliers. Companies, when you look at, you can talk about Aspen, some other large cap businesses, you mentioned Naspers, for them to justify the multiples that they trade on, they need to grow their earnings in real terms at about 25% per annum over the next 10 years by our estimates. Now, for a company to do that, it's a tough job. I'm not saying they can't, and you might find the odd business that does do it. But by and large,
Naspers is the exception that proves the rule.
Yeah.
Is Aspen that exception, Viv?
Yes, it most certainly is. And you just talk about growth rates here. Yes, it's growing very fast, has a high PE, but it's a tiny part of the market it's trying to target. It has a huge growth possibility. It's less than, I think, 2% of the total market that it possibly can be targeting at the moment. So its market share is tiny, and therefore the growth prospects are great. And with the history they have in terms of like past acquisitions, past management, and past expansion, I would have to believe that they have the ability to actually gain more market share. And then the growth path is quite large. It's quite.
You're tempted. I can see it. I can see that you're tempted.
It's a fantastic business. You've got to.
It's like being faced with a big, fat, juicy steak at the end of a long, hard day. You know you probably shouldn't, but you really want to tuck in.
It's a great business. You've got to distinguish a great business and a great investment.
But that's the point.
For a value investor, a deep value investor at that, unfortunately I can't.
You have to shoot it down.
I have to shoot Aspen down.
Is he going to regret it, I wonder, because that's what is going to happen in the next part of the show. Viv Govender has given us 2 shares. Steinhoff International, trading at a reasonable multiple, which scares Andrew because we wondered whether or not he should pick it, but he shot it down. And then Aspen Pharmacare, wonderful business, wonderful management, absolutely great. Not a good enough investment, however, for his deep value bias that he carries. And Dittberner from Cannon Asset Managers is chosen a share with a multiple of 20 times, which is uncharacteristic and brave and courageous, and we salute that. In Adcorp Holdings, Adcorp, however, got shot down on the basis of complexity across many geographies and the concern there for regulatory environment. Sasfin, however, multiple of under 11 times. Viv Govender took that with both hands. Will Viv regret not accepting the last pick, however, that Andrew has up his sleeve? And what does Andrew have up his sleeve? As I look at his pick, that is interesting. And so is Viv Govender's final pick as well. Is going to be a juicy one that Andrew has no choice but to pick. Who will endure? Who will take a detour? You don't want to miss the final share picks as we see you when we come back. Part 2 of Share Shootout this evening. We've got Viv Govender from Vunanai Private Clients. We've also got Andrew Dittberner from Cannon Asset Managers, head-to-head, toe-to-toe, face-to-face. And if Viv was in his old job as a security guard, Andrew would be quaking in his boots. But we know he's a gentle giant, really. Did you ever punch anybody when you were a security guard?
In the UK, you can't even touch anybody. You're charged with assault.
So what was the point of being a big, burly, bald security guard?
Standing there and looking scary.
Yeah, I get it. Let's drive into the final share picks this evening. Andrew Dittberner, you went first last time. But I want to make you sweat, so we'll make you go first this time too, because I want you to also make Viv sweat just a little bit. I'm interested in your final pick. It's a fabulous business. I've just recently acquired a book about the mining history of South Africa, and it goes back to the commercial mining history, goes back to the discovery of gold, of course, and of diamonds in 1855 in Kimberley, but also it talks about the early gold discoveries in a little place called Pilgrim's Rest and in Barberton. Pan-African Resources still manages to find gold in them thar hills. In 30 seconds, tell me why you like it.
Yeah, Pan-African, I think they're the one gold company that are getting things right at the moment. When you look back over the past decade, gold companies haven't paid dividends, or they've been very measly dividend payers. Pan-African Resource trades on a dividend yield of 5%, so they're very cash flow positive. They operate at the low end of the cost curve. I think at the last results, their all-in costs were $1,000 to get gold out the ground at a gold price of $1,300 an ounce. There's a nice margin of safety there. They've got good relations with labour unions
And
it's at
there
the
you
right
shall
price.
have to stop it. Do we like, sort of men in khaki trousers and white shirts and broad-brimmed hats with beards panning for gold in the hills of Barberton?
I doubt that's the case at the moment, but there's two issues to look at any business: supply and demand. Look at the demand for gold. I don't think the gold price is going to go anywhere near the kind of highs we hit after 2008. The fears around, tapering, the fears around QE have been, dampened by tapering around the world. We are seeing the fact that, some of the emerging markets are growing now, and therefore we're not going to have the kind of currency collapse that people were fearing in the past that was driving the gold demand. So gold price is probably going to be supported by physical demand, but they aren't going to be hitting the 2000 levels again in the near term.
Does that worry you, Andrew?
No. As I said, they're a low-cost producer.
Low cost, $1,000 an ounce is not a low cost.
It's 20% lower than Anglo gold, for instance. So there's a decent margin of safety there. Not all their mines are deep underground mines. They've got the Barberton Tallinn retreatment project that just came online within time, within budget last year. So that's a very low cost, if you're looking for a low cost mine, if you can call that. They've got the open cast mine in Barberton as well. So from that perspective, they can get mine out the ground at far lower cost than what your deep South African.
Okay.
So we don't need to worry.
We don't often get gold
price.
shares picked on the show. That's why we're a little bit shocked. Viv, blow it away.
Yes, so we've talked about the demand side. Now we're talking about the cost side and the supply side. Look, the regulatory environment in South Africa, especially in the mining sector, is a total mess. I mean, you can look at the mining endowment and Sisubanga, what's happened there. Even though calculations at the moment are quite cordial, as you mentioned, between labour and management, I doubt that's going to be continuing. There is a real fight right now happening in the mining sector among unions. The more militant unions seem to be winning out, and that's going to be something that's going to push around the sector. It's happening in platinum. It's going to move to the gold miners and other mining sectors as well. I don't see costs being under control, as you mentioned. Electricity also is going to be increasing in a number.
So, Dr. Doom, you're shooting it down.
I am shooting it down.
Okay, Dr. Doom. That was his scary security guard visage. Now you know why people never came into his building and why the business he used to be security guard went bust, because nobody ever came through the front door. He was just so scary. Right. Andrew Dittberner, you have chosen Pan-African Resources, which has been shot down. Viv Govender's final pick. It's in the right spot in terms of valuation from your perspective, and that'll tick that box. But it's on the other side of the scale when it comes to taking big bets. The pick, Viv Govender, in 30 seconds, is Sasol.
Yes, looking at some industry in which the price is definitely go higher. We have petrochemicals, we have the chemical industry as well that they have associated with them. The operations that they have in Europe, because the European economy has bottomed out. We have seen the Italian yields fall. We have seen some stability return to the region, and that's obviously going to be positive going forward. The operations they have in the Middle East are doing reasonably well, beating estimates. The stuff that's happening in North America at the moment, yes, there have been some bright downs, but if you look at the total amount of possibility and potential in the area, the largest economies of the world.
Boom, you're done on that particular point. I have to say boom when it comes to Sasol. You've got to like it.
We do like it.
Well, it's a relief, isn't it?
I'm glad I kept this until the end.
You sound like a politician. You're taking collective responsibility. You're not going to be held to blame for this one.
Sasol sits in our portfolios. The price we do believe is fairly attractive for a big resource business at the moment. The concerns we would have around Sasol is what, as you mentioned, they like taking big bets. The ethane cracker in Louisiana is a massive bet, and if they get that wrong, we could see.
What does an ethane cracker look like?
I have absolutely no
idea.
Ask David Constable.
Absolutely.
Yeah. And they don't have the best track record.
But if it goes right.
If it goes right.
The sky's the limit. This is R1,000 share in 5 years' time.
I don't think it's in the price yet, because it's quite a few years away. But I think you've got a bipolar or a polar outcome here. Either they get it superbly right, as we saw Omnia do a couple of years ago, and the share price flies.
What are the odds that they get this one right, Viv?
I think it's very high. I mean, you're looking at the US. We're talking about the new frontier in terms of petrochemicals out there. We're talking about the fastest growing developed market in the world. The US is still the largest economy of the world here, and even though we have the Chinese increasing demand for petroleum at about 8 to 10% a year, the US is still the number one demander out there, and I think that's just going to grow going forward. As the economies grow, they demand more petrol, they demand more energy, and Sasol is placed in the right part of the world to actually take advantage of this.
All right, but you're going to take it.
Yeah, no, I agree with Viv. We like the business. It's a great company. The share price tends to follow the Rand oil price. So, if you're bullish on oil, and if you think the rand's going to weaken, well, Sasol share price should do well in the short to medium term. And then obviously the big elephant in the room is that ethane cracker. If they get it right,
most certainly do.
happy days.
I'd like to meet ethane cracker one day. Right, we need to pick a winner, which is always very hard. So at Karabo, KTL, you need to tell me, please, your view this evening as to whether or not we let Andrew go or we let Viv go, because it's neck and neck. It is very close. It's neck and neck, mostly because they're both taller than I am. Karabo, KTL, give me your verdict. All right, so do we go for the more adventurous side of the market? Do we go for the smaller caps? Do we go for the more feisty smaller caps? Do we go into that space where we see low multiples on small companies that have got massive growth potential? Or do we go with Viv Govender's larger side of the market with Steinhoff, Aspen, Pharmacare and Sasol? The producers concur that I'm afraid Viv Govender from Vunanai Private Clients, you need to try harder. And I wonder if there are enough small companies in the JSE worth investing for Andrew Dittberner to come back next week to give us another 3. That is the big question, of course, we face next week, as just one stock picker who feels the desire to scuffle with the Dittberner will come and take on Andrew right here on Share Shootout, the most ruthless stock picking show on television. Do stay with CNBC Africa. Tonight is up next, and I may even wear a different outfit. See you next time. Bye-bye.